financial side of and I'm probably just going to repeat what people are answering here, and feel free to jump in and answer questions too. I'm sure that's what you guys already do on Zoom anyway, but I'll be sitting down and we'll just have a casual conversation about your finances, like the financial basics of real estate. I was just diving in and saying some of the things that I've learned in real estate is that, yes, it does take money to make money. And the more money that you have to leverage, the more you can make. Online, is that working? Okay, so just to give you guys up to speed. So I'm just teaching you guys learned the basics that I've learned to actually start to like grow that pot of money so that you're able to turn around. No? Is that better? Okay. Okay, online people, feel free to chime in anytime. Okay, what was your name? Kaden. Oh, wait. Oh, I was like, I swear we just said this. Okay, so Kaden, how long have you been in real estate? A year and 2 months. Awesome. So you've been around, you've seen a lot. What would you say, what has been something that's been positive that you've learned financially from real estate? Besides, you get paid a lot of money in commissions. Mm-hmm. Totally awesome. So just for people online, I'm going to repeat what you said. There's just a lot of different avenues in real estate to be able to make money. There's just so many different ways you can make money, not just the traditional buying, selling, helping people, but you can invest. You can be somebody who's a great referral partner, like a photographer, things like that. I love that. And as you can see, there's people in our office that do staging. There's people in our office who do a lot of different things that literally help them grow their wealth. And so, and you know, it was one thing that was really funny is that there were a lot of agents in here that were making lots and lots of money at one point when I was on staff here, and I would sit and watch their money go up, but they weren't investing into real estate themselves. And investing in real estate yourself, you guys, we have an awesome opportunity to invest in real estate for very little, like little amounts of money compared to your average consumer, just because you have a built-in commission that is also a built-in down payment. So I want you guys to start thinking about like just how that can compound. Okay, online people, do you guys have questions or anything you want to like specifically cover today in our financial basics class that would be important for you? Do they usually chime in? Do you guys know?
Thank you. No questions. Thank you.
No questions. Okay. Okay. It's 50-50. Okay. Well, feel free to just jump in. Really don't be afraid to talk over me. I just want to make sure that I'm giving you guys the stuff that you actually want or feel like you want when I'm answering them. Okay. Okay. So we're going to go through this a little bit. So some of the habits that they say. So behind me, you guys see the list of the habits of a financially sound business. Okay. So first, setting a profit goal that funds your big life. Have you all done that recently? Have you set a financial profit goal? Yes, you have. And you two are new, so you don't have to say yes. That's okay. Right. Uh-huh. Right. Right. So you got the scorecard that shows you exactly like, okay, so if you want to make this much money at the end of the day, it breaks it down to what you need to make, correct? Okay. So yes, exactly. So setting a profit, we're gonna go through it. Like profit does not necessarily mean your income, right? Like the money that comes in every single month, your gross salary versus your net salary. They're two very separate things. And I want to really be clear about that. So this is talking about, okay, what is the actual profit in your pocket that actually funds what you really want to do after all is said and done? Okay. So understanding and identifying, first of all, I think big thing, and if you haven't identified this yet, go back and say, what are your goals in life, period. Don't just say it's in real estate, because real estate is great and everything, but like it's meant to fund something bigger, a bigger why, right? A bigger reason. So identify what that is. Is it a trip? Is it a house? Is it like a specific type of home? Is it a certain amount of retirement? Is it assets? Whatever that is, identify it so that you can start to break down the numbers. And if you don't know the numbers, there's somebody here in the office that will be able to help you understand those numbers on a higher level of what it's going to take for you to make that money. One thing that I did when I was first in real estate, I wanted to go on a big trip to Europe. And I thought, oh, I threw a number out there of how much I thought it was going to be. But just by identifying it, I realized, okay, well, I want to go and do some other big fun things while I'm there. So I actually broke down what the costs would actually be for me to actually go on this vacation. So the plane ticket, the hotels that I wanted to stay in, not just any hotel. It was like I wanted historical hotels. Like I wanted historical references. I wanted to go on every tour that I possibly could, things like that were important. I wanted to eat whatever I wanted to, whenever I wanted to, because it looked good, right? So those are the things that I did to research to know exactly how much money I wanted in my pocket to be able to fund that. So being specific and understanding that is so important. And so the more vague you are, the less likely you're going to make that happen, right? The less excited you're going to be about it. You're gonna be like, oh yeah, I want that one thing sometime, right? But the more specific you are, the more excited you get. Okay, and then your other habits, estimate, save for, and pay for your taxes on time. Taxes exist, folks. I can't tell you how many times. Again, I have this unique perspective that I don't know if this happens now and today with our agents, but this did happen around tax time. It wasn't uncommon that our financial officer would have an agent, a high producing agent in our office, or 2 or 3 or 4, come to her and say, hey, can I get an advance on my commissions because I need to pay my taxes? They made a lot of money throughout the year. And that's not something we do here at KW, but she would get asked consistently every year. So planning and saving for these taxes, that can make or break a business, period. It doesn't matter if you're in real estate or not, like making sure that you understand. And then use proven models and systems of the MREA. Be fiscally savvy by reviewing your financials monthly. That's what works for me. And paying yourself a salary rather than, hey, whenever money comes in, I get this huge check. It gets exciting if that's the case, but the reality is it's just not sustainable. And then prepare now for financial security in the future. Okay. Any questions on these? Anything specifically you guys are really excited to kind of cover? No? Okay. See if there we go. All right, so let's look at these 2 scenarios. Look at the one on the left versus the one on the right. Kind of look at it and tell me what you think is financially sound and not sound. Just some things that you recognize off the bat. Saving for taxes, yep. Is what? Sound or unsound? I had to ask, come on. Sound, awesome. What are some of the things on the right versus the left that you find interesting? Because they've kind of pulled this out to like a pretty good graph. Wallet versus bank account. It goes through the business account, then to the personal bank account. Is that what you're saying? Yeah, having it go between the business and the personal. What else? Just curious, do any of you guys have an actual business entity set up? Do you have a business bank account? Okay, that's, now that you have an entity, you can make an actual account. Yes, yes, you can. So, well, so the question is can you make multiple bank accounts? What are you trying to accomplish with that?
Well, I mean, my parents are into this as well. So like
My water.
we have a business LLC, but I don't have like specifically like bank account. For me, it's just kind of like a whole business. Use that as like this.
Your parents' account?
So it's like we have a business LLC that I'm a part of,
Okay.
but we haven't made a bank account for it yet. I'm just wondering if maybe I should make a business bank account within that LLC and use that for investments also for like business.
So are you are legally a part of the business LLC, correct? With your parents. So so it's an LLC, not an S corp, correct? Okay. And are you okay with your parents also being a part and able to access the funds from what you make specifically?
Right now, yeah, I guess I think so, but probably not.
I would say go and make your own either LLC or S corp. Talk to an accountant, and the reason being it can function under the umbrella of that LLC, but it's a very separate entity. And I would absolutely say get your own entity, just because this is a separate business within that investing portfolio. You can have that investment portfolio and this can be part of it, but you don't want it to be, you don't want them connected to a point where other people can get into your own account. Does that make sense? So that's a good question. And again, talk to an accountant and talk to a CPA to really know how that would work best for you and how you want to function. And it might be two very separate entities. And then what you guys do is have, your parents have their investing, you have your investing, and then they both can fund a separate entity that you both own. Does that make sense? It's just the more that you keep it like the what's called the boundaries clear, the less likely you're going to have audits on your taxes. And on top of that, just room for embezzlement, not because your family's going to embezzle from you, but just room for error. You want to make it clear. Yeah. So that's something that I'd say, definitely. Good question. So I will say this. Okay, so let me just give you guys a breakdown. Where did I put my water bottle? Did I not set it? Oh, I set it over here. So something that I've learned again from this is absolutely make sure that you have your business bank account and your personal bank account as two very separate places. Novalee wants to pay you out into your business account. It's just less room for error, less room for you guys to take the money and just spend it when it comes in, right? And that's what we're trying to not have you do. We're trying to help you guys understand and utilize your money on a high level. So when you're saying that can we have multiple accounts, I will tell you one strategy that I've used and me and my husband have used is we will actually open up several accounts under one business banking account. So just to help us even categorize our expenses at an even higher level. So as you can see on here, it shows, okay, well, you have your business bank account and you then from there, you're going to move into your personal account. And then from your personal account, you'll do your savings for taxes. For us, I do a separate bank account within my business account that pays for my savings. I mean, that pays for my taxes there. I pull it out of that. Does that make sense? So it's still the same concept. It's just a little bit different of how this is all set up, but very similar. And we save for our taxes every paycheck, every month. We go through it, we set it aside. And I'll tell you, it gets expensive and there's a lot of money in it, and it's tempting to want to touch sometimes, but because we have it in a very separate account, we don't touch it anymore. Before we got into the system, it was easy to want to touch when you're saying, well, yeah, there's 30,000 sitting in there. We can do that, Okay, so here's some of let's go through this example. Okay. So one transaction, commission of 9,000. Do you guys know what the average purchase price of a home is right now? 450, 454, I think, is what they currently just came out with. So what's a commission, a 3% commission on a 454? We're gonna do this one that is a $300,000 commission. But what was that? 13,620. Okay, perfect. So your average commission right now, isn't that crazy to think that your average commission right now is that much money? $14,000. It's pretty nuts, right? When I first got in the business, it was 7,500, 250. 250 was the average home price. Isn't that crazy? Yeah, just in just a matter of 7 years, folks. Crazy. So we're taking this as a $300,000 home price. One transaction, a commission of $9,000. So they're saying the net payment check is $5,760. Do you guys know what that number represents? The net payment check. Yep. After commission split with KW. Now I know you guys are on the new agent team, so I'm not sure exactly what the splits are with you guys. What was that, half, 50-50? Okay, so it's a little different. And does that also include KW splits as well, right? So it's 50-50, right? I figured that was it. I just didn't know. So, but when you do cap, or when you do graduate from the program for your first, is it 5 deals? 4 deals. Okay, there you go. First 4 deals. Once you've hit your first 4, then you guys go to the regular Keller Williams split, which is 30% to the in-house right now, Keller Williams for KW Orem, and then 6% to Keller Williams International. So a total of 36% will go to Keller Williams and International, up to your cap amount. Keller Williams here in Orem is 15,000. Keller Williams International is 3,000. So a total of $18,000 that you'll ever spend in commission splits, minus the new agent stuff, in one given year. So when they say that you're a capper, that's what they mean. You've hit that $18,000 that you've paid towards commissions. And then after that, you get 100% of your commissions after that, which is, again, a very cool thing. I don't know how much research you guys did before you came to Keller Williams with the other offices out there, but a lot of times that international fee does not go away, and there is no real cap. A lot of times that international fee is even 6%, 6 to 10% of your commission. Okay. Oh, and then $24.19 in your pocket. So that's them looking out after you take out your taxes on top of that. So let's go through how this flows. Okay, flow of money. This is what we typically see, right? You have your income, you minus out your expenses, and that's what you have left over for your profit. Is that how you guys pretty much do your personal bank accounts? Pretty much. So they're just saying, let's flip that on its head and say, let's actually make a goal and let's take out our profit first, right? And then we understand our expenses and then our income. Does that make sense? So like, what's our profit goal? Identifying that so that we have more control over that bottom line of our income. Okay, So understanding how much you want to make, then you know how many homes you need to sell, which will direct you on your daily basis of what types of activities you need to be doing. Okay. Okay, so you pretty much get real estate income from 4 different places, minus obviously, Kaden, like what you're saying is there's lots of different places to get income, but it usually comes down to listing, buyers, referrals, and lease if you're doing commercial lease income, right? So for you guys in this room and maybe online as well, I assume, is mainly listing and selling. So buyers and sellers. And referral income. Referral income actually can be really, really lucrative if you know how to do it correctly. Because everybody knows somebody who's moved out of state or out of our region. So making sure that they get set up with the right agent, you make 25 to 30% right off the bat. That's pretty awesome for literally connecting to people. That's not a bad problem at all. So, okay, so let's look at some of our cost of sales. We talked about the KW, the office commission, right? The office split, the royalty fees. So that was the $3,000, the international fee, right? And then commissions or splits paid to employees or independent contractors. So things, your expenses that pretty much go out in your business, and referral fees. So these are your cost of sales. Anything else to add, you guys? Okay, so does this look familiar? This sheet? No? Yeah, is this the one that Shoni gave you or no? Different? I'm not familiar with that one, with the one that he gives us. So this is just pretty much giving you a formula of how to break it down. It's pretty darn simple. I'm not gonna lie. So oh dang it, let's do this. Let's do the activity. Oops. Come on, did I not do it right? Okay, so let's look at this. Let's look at these scenarios. You have not yet capped on company dollar or royalty. What is the net commission check you will receive after your cost of sales? Okay. So say our commission is $10,000. Let's just do a really quick 10,000. So what would our end net commission be if we're minusing out our 30% to KW here in the office and 6% to international? 64, right? 36% of 10,000 is $3,600, which would leave us $6,400 in our pocket. Not in our pocket. I shouldn't say that word, but that will be our net commission. Okay, so what if we have capped for inside the office and not with Keller Williams International? Because that is very common that you don't cap at the same time as your international cap. So we would take our $10,000 times it by 0.6%. So what would our net commission be on this one? Mm-hmm. $9,400. So $600 for the commission, the international fee. And then, so 10,000 minus 600, 9,400. And then you've capped on both. What's your total commission? 100%, $10,000. I'll tell you, the faster you learn to cap, the better off. So my cap just started over in February. I usually like to stack it. So if I have anything going on in January, I'd like to push it off to February, just so I can get capped really quick. And then I have a full year of capping, of being capped in full commissions. So 1.6 million of adjusted gross volume will cap you. So if your client is going to purchase a home at 1.5 million, you're pretty darn close to capping at that point. Yeah, it'd be bomb, right? So 1.6, I think it's 1.67 million adjusted volume. So adjusted volume means that if you're getting paid 2.5% on the deal, you're getting less commission, right? So it's just adjusting it. So a 1.6 million might be closer to 1.4, right? So that's how you adjust it. If it's not the full 3%. Okay. So just so you guys are aware of that. So they go by adjusted volume. But I will tell you, like I think my first year, it took me 8 months to cap my first year. And then every year after that, like they usually say it takes whatever you take your first year to cap the first time, the second year, it's half of that time or less. And then after that, it usually you have more of a consistent flow of things. So, and that was exactly what was right with me. For my first year, it took me about 8 months to cap. It took me a little less than 4 to cap the second year. And now I usually try to cap with my first 2 months, 2 to 3 months at that most, of every year. So that's what I would say for you guys is just know that your first year is the hardest to learn how to cap. Even if you just barely cap your very first year and you start all over, it's going to be a lot quicker just because your business is rolling, and it really, you'll see the difference. So don't get discouraged. Don't jump ship just because your cap is starting over and you're like, oh, this other brokerage is going to give me $500 per transaction. Stay where you feel like you're going to be the most successful. The $18,000 is almost, to me, it's like, it's just a cost of sale. Thanks for coming. No, you're totally fine. I'm glad you were able to stay as long as you did. Okay, so let's talk about your net profit. So this is something easy. Have you guys identified how much you kind of want to have in your pocket? How much do you want to, Kaden? What do you have down to the cent? Oh, awesome. So what's your number? $75,096.51. That's amazing. Okay, so have you done this? Have you learned to see exactly how much you need to make in that given year to have that in your pocket? Okay, get your calculator out, get your phone, get your calculator out. People, let's do this let's do Caden's goal right here together, if you don't mind. Okay, 7,096. Yeah, I thought I said that. $75,096.51. So everybody do that. $75,096.51. Okay, so now we're gonna figure out what it's gonna take Caden to do to get that amount. Okay, so first of all, it tells us divide the net profit by 60%. Why are we dividing it by 60%? Does anybody know? Cost of sales. Yep. So we're going to divide that by 0.6, because 60%, 0.6. Okay. So you should have 125,160.85 cents. Now let's figure out our gross commission income. We take that same number, the 125,000, and we divide that by 40%. 0.4. So divide by 0.4. What do you have? 312,902 and 12 cents, 13 cents, right? Okay. Now our average home sell. Okay. What's our average home sell again? Did we say? What was that? 450. So about $14,000 in commission, right? So let's go ahead and divide that by $14,000. What do you have? Okay. 22.35. Perfect. Okay. And let's see, anticipated cost of sale. Oh, yes. Why didn't they put that before? That's really weird. I thought I had that before. So they're saying anticipate your cost of sales of $18,000, which is, our KW cap. And then this is really dumb that they had that on the very end. I'm really annoyed, but okay. So we have 22, right? I just want to stop there. 22.35. So let's round up. For example, 23 sales. You need 23 homes to sell in order for that to be in your pocket, your profit. Does that sound doable? It doesn't sound too crazy, does it? Just shy of 2 per month. That's not crazy. It feels crazy sometimes when you're first starting. You're like, oh my gosh, I can't even find these first time home buyers a house. I've put in 20 offers, right? And it feels a little like mundane, but if that took you, and I don't know what this is going to fund for you, but if that took you 2 years to do, would it still be worth it? 3 years? Right? It doesn't seem that crazy when you put it in a larger perspective. Can I ask you, would you want to share like what that money would do for you? Buy a ring. That's awesome. So you're dating somebody? Congratulations. That's amazing. Trips. So housing. So it's a lot of things together, a lot of bigger picture things, right? So yeah, in the next 2 years, if you had all those things and you looked back, it'd still be worth it, right? And I think that's the hardest part, is keeping that bigger perspective when you're in the trenches of every single day. It totally sucks sometimes. But then again, there's also some really cool stuff too that happens on a daily basis that is fun. So thank you for sharing that. That's awesome. Congratulations. Okay, here we go. Oh, I didn't know that they were gonna have this here. Here we go. So net profit goal of 100,000. So we did ours. Royalty caps, they put it for 23,000 because that's not an uncommon number. Oh. And then multiply it by 30% for your operating expenses. So just saying, oh, I see. So they took the total gross commission income and times that by 30%. Maybe fact check me. Is that right? So it's just, yeah, it was a little dumb that they did it that way. But so they wanted to also just show you guys exactly what it would take that you want to turn around and your operating expenses and budget. I will say this, another thing that I've learned with my business is that put the money away to reinvest it back into your business. If you don't, it won't happen, or it'll be haphazard. And then you're dipping into your monthly income to do that. And it's way more painful. So like when you're having client events, plan for that throughout the year, make a big general master plan and break it down per month that you know that you're saving every single month for our, like say, for example, our corn maze event, you know, that we have every single year at KW. I promise, like, as you plan for that, when it's time to actually do it, it's a no-brainer. And that's the kind of stuff that brings you more clients. You have that that client appreciation, that interaction with your people, and it'll just bring more business because you have that in place. One thing that I do every single month, every one of my closings. So every time I have a closing, I have my assistant, Cami. What she does is she will send out cards, gift cards. I have a gift card campaign that goes out 4 times or 3 times a year after they've purchased a home with me. And so it's a system that I have, but every month she's purchasing gift cards. And if I don't have that money set aside, I could bounce every single month, right? Because that's an expense that's going through my account every month. But I understand it's worth the money, because getting random texts from my clients saying, oh my gosh, like, thank you so much for this gift card. I didn't even thank you. I really appreciate it. I have a sister that's needing help with this. Could you help her? Right? I've gotten so much business just from those gift cards that randomly go out that my clients, like, it just hits them and they're like, this is the coolest thing I've ever seen. You know, it's awesome. It's a really fun, cool system that I've used that absolutely brings me more business. Yeah. Oh, so a gift card campaign, I just literally, when somebody closes a transaction with me, I'll send them tickets to like the movie theater. I'll send them. Yeah, so I do a 3-month lag time. Mm-hmm. I have that in my, that's just with my own, my transactional, my assistant, my coordinator. So it's just that she knows that once somebody closes, she goes out, like at the end of the month, she goes out and buys all gift cards for that person specifically. And she has like a little thing that she writes all the cards out for the full year. And then she files it away January through December. And she puts them in every 3 months for their year. And then, so at the beginning of the month, at the end of the month, she buys the gift cards, and then she takes the other gift cards for that month and throws it in the mail. Does that make sense? So that's her. No, it's every 3 months for a full year. And so they get a card. They get a card from me the month that they had closed the year prior. Yeah. So it's that's my touch campaign that has worked, and it works on a high level for me. So. Okay. Okay, so yes, there's best practices. I'm not gonna go through all this because you guys know best practices. Okay, let's do this. Online, anybody want to chime in and ask any questions? No? Okay, so what time do you have to leave, Kaden? Oh, perfect. So like another 10 minutes. Okay. So I'm going to kind of give you guys like a breakdown of what I do specifically, like that really helps me. Again, so never in a million years did I think that we would be able to gain as much wealth as we have by just budgeting. Like, I know it sounds crazy, but it's like, I kind of what Marcy was it Marcy? What's her name? Carla. I'm totally off. Okay, you guys. So Carla, so what she was saying is that she doesn't really pay attention to her finances. I was totally like that as well. Like I really just like leaned on my husband to do that part. There's usually at least one person in the relationship that kind of takes care of those things. So, I mean, for me, we started reading a book called Profit First. Have you guys heard of it? That was okay. So I used to be a big Dave Ramsey fan, whatever, like totally all in about budgeting. We've never been a family that has had a lot of consumer debt. We've actually had little to none my whole married life. But I will say Profit First was the first book that I read that things actually clicked for me to say, holy crap, this is how you actually like run a business financially. And me and my husband have owned businesses since we first got married. So it was just one of those things where it just finally all kind of fell into place. So something that works for us and that I want to share with you guys that has been super helpful is this. It may take you a few months to build up to this point. It took us a few months to kind of get it, so it was not as clunky. But what we do is we have one account specifically that actually gets like that has all of our income dumped into it. Just one specific account, right? For our different business. Well, sorry, our different businesses have one specific account. So like my husband's business, his gets dumped into this account. My business gets into this account. So with our LLCs on it, does that make sense? But we have all of the income coming into one account for these different businesses. We don't touch it at all that month, like at all. And so at the end of the month, before the next month, we will look through our budget and we will say, okay, what do we have going on this month? What do we have budgeted? What do we need to do with this full pot of money? Right? So then we'll break it down to our taxes. We'll break it down like into the individual ones. Hey, this needs this much taxes. This needs this much for this much expenses. This is the amount that we put into our personal account, right? And then from our personal account, we also divide it up into smaller buckets there. And whatever we have left over, we put right into savings. So let me give you an example. Like, so say my own personal business account, say any given month, I make $10,000, right? At the end of that month, I'm going to say, okay, 30% goes to taxes, 3,000 right there into this bucket. 20% operating costs will go straight into my operating cost bucket. 50% is going to go to my income. So then I just take 50%, I put it into my personal account. Okay. From that 50% in my own personal account, are you guys following me? Okay. From my personal account, then I say, okay, that 50% combined with whatever my husband makes, right? Or whatever we dumped in for my husband's, we're looking at this and we're saying, okay, our monthly expenses say we have another 10,000 right there in that bucket with my husband's money. So from that personal account, then we say, okay, our expenses this month, actually with all of our regular costs, our monthly costs, our variable costs, our food bill, whatever, are really only $4,500. We put them into separate buckets. We have separate accounts. So if like my UCCU account, they hate me because they look at it and I have over 40 accounts because there's so many different buckets. And it sounds scary, but the thing is what we do is we have all these little buckets and we say, okay, that is what we dump them all into. And then whatever's left over, so that $5,500 or so, we will put it straight into a savings account. Don't touch it, don't need it. We don't look at it. And then we have only one account that money comes out of, which is very separate from any of the accounts where income goes. It's a very separate account. And we only have one debit card that we pay out of for our business, a separate business one, and then a separate personal one. So from that personal account, if I'm going to pay for lunch or pay for whatever, right? I use that debit card. And every week or every month, whoever, like my husband does it weekly, I will do it monthly. We will reconcile the account and we'll say, okay, well, this was from Smith's food store. So it was a grocery. So we'll pull out of the grocery budget and we'll replenish what was in our debit account. So we have very finite numbers of exactly how much we're spending every month. So to start out with, we actually started out with saying, okay, we're going to keep 5,000 specifically in our account at all times, right? So we save for medical, we save for, we actually even have a personal non-contingency budget. So each of us, like, it doesn't matter what you spend it on, you have this much money every month to spend on whatever you want to for each person of our family, right? So that if that comes out of that account, we have a specific bucket that we're pulling from and throwing it in there. Does that make sense? It sounds really complicated. I promise it was probably the most simplified version I could have done for my own mind, because it compartmentalized everything for me and helped me understand that, okay, if we really want to gain traction, we can't just like expect that this bucket is going to grow. The savings bucket is going to grow after we minus out all of our expenses, right? Our savings happens at the beginning of the month before we even spend $1. We are. Exactly. That's why it took us a couple months to figure it out, because we're planning for a month ahead, right? And so it's not just, hey, we have money left over, why don't we go and buy this random piece of furniture, right? Like, because it's easy to do that in the moment if you have $2,000 sitting in your account. But if you're actually being more intentional about it, it helps you build and gain more traction on a higher level. So that's something that, again, for us, it was such a game changer. Like, I mean, I'm not joking. Like, we were able to, we were making the same exact money, you guys. This is what's so ridiculous. I think it was the breaking point of when, between me and my husband, we had made almost $75,000 in 1 month. And we were like, this is ridiculous, because we only have 30 sitting in our account. Where did it all go? And I mean, understanding that like some went to taxes. So we did actually do that before, but there were things that we just randomly purchased that was like a bigger expense, because, oh yeah, 10 grand here. Sure. Let's just drop it. This is what I want. This is what we've been wanting this, but yeah, we didn't really save for it. So, but we have the money, so let's just do it. It's so easy. Yes, we spent $10,000 on a bed. So dumb, but the best decision I have ever made, you guys. I'm not even joking. I sleep like a baby. It is amazing. It was an investment, best $10,000 ever, but it wasn't planned for. And now I look back and I'm like, okay, had we planned for that, it wouldn't have hurt. I mean, it's not like it hurt doing it in the first place, but at the same time, it just could have been used to leverage something else later down the road. So now we've invested a lot in a lot of properties ourselves. And we do a lot of flipping. So at any given time, we need to have on hand like $250,000 to $300,000 of cash. And there's no way I would have been able to do that had I not started doing the basics. So this helped me understand, okay, yes, you need to start paying attention to it. Put away your expenses for taxes. Like I said, I watched some of the agents that I loved ask for help on taxes because they just didn't put it away. Like that was almost ridiculous to me. I'm like, that's so dumb, but I can see if you're, so is that, I don't know if that's helpful. Like, but for me, I'm like, it's just like, I've learned now, like I said, the larger quantities of money or cash that you have on hand, that will be your biggest asset to building more wealth. And it's really stupid that we have to have cash to build cash. We have to have money to have more money. But if you look at like the most wealthy people, they've just learned how to leverage on the highest level. They've learned how to take out equity of their home in the smart, financially less risky way to turn around and create and produce more, not just to take out equity from their home to pay off debt, consumer debt that is their liabilities. They depreciate over time. They don't appreciate, right? But the most wealthy people out there, they have investments in real estate, and the only way they're able to do that is with cash, right? Is you're wanting to do that, right? You're wanting to build that.
That's kind of where I'm at depending right now, because like we have to work with our lenders, right? Because we just don't have, like you said, sort of the able to just pay cash to purchase that. So, and that's kind of where I'm at just in general. Like I think I have an idea of as soon as I do this amount, like I know what to do with it. But right, it's just we're gonna build that right now. Just because I just got my license, and so I'm just getting started. But
Right. And how can you expect to be a great manager of that cash and money if you haven't practiced it either? Right? Because even if you had a hard money lender that comes in and hands you a large amount of cash, you're not gonna be able to leverage it on a high level because you don't know what to do with it. You don't know how to do that. You haven't tried it. And so like it's just more along lines of like being able to flip it. So another cool thing that like I'm just giving you guys examples of things that we've been able to do just because we've been able to start building this cash on a higher level. We've been able to diversify just our different types of investments. Real estate is our number one, obviously, because that is something that works for us. And because my husband does mortgages. So it's like, we know the world, we know the realm really well. It's just what we do. But on the flip side of things, we have actually started looking into a couple other really random sources of income. And to your average consumer, if you're looking at it, it's a high threshold to be able to invest into that realm. But if you have $50,000 in cash setting aside, we're looking at returns of $30,000 a month income, base income from these for $50,000 of investment. We understand that the average person does not have $50,000 sitting to be able to invest. So we understand that too. So just like we're looking at how to create more with less. It's a very big snowball effect. And we're talking about your guys' lives, right? We're not just talking about like small time. You guys are here to create something bigger, right? I'm of the opinion that it's not a bad thing to go after things that you want and that are of material either. sometimes it just gives you the goal to want to think and be bigger. It doesn't mean that you're attached to it. It doesn't mean that that defines you, but it does define what you're able to do and give at the end, right? Of what you're able to create. Because I find that when I create more, I'm able to bring more people with me and bless their lives with it. That's my bigger picture. I love beautiful homes. I love flipping homes, and I flip like mid to high end renovations. I love that. We're about to build our house of our dreams right now. It's exciting and it's a lot of fun, but at the same time, that has nothing to do with what I want to create and where I'm going with it. So I think that there's sometimes guilt built around building wealth, but for me, I've only seen it be able to turn around and help the people around me and elevate what they want and how they can do it, just because it opens up those doors. And I think that's what this whole MRE model of financial like planning that gets you there. So I know you have to get upstairs. So Kaden, so nice to meet you. Oh, good. I'm glad. If you guys have any questions, you're always welcome to call me and ask me like kind of how we have our like I said, our bank account set up. It's very different, but Profit First was really the model. That book, it was by Mike McAllowitz. Anyway, that was one that just really opened my eyes to help me understand to put that money away, because it doesn't make sense for you to make money just to make it. Because yeah, for the procrastinator, they will always fill the amount of time that's given. For somebody who doesn't manage their money, they will always spend what's given. Right?
Yeah, that's true. Just being accountable.
Yeah.
Cool. I appreciate it.
Yeah.
Think about I'm gonna do like 40 different accounts. I'll reach out to you.
You don't have to do 40 different accounts, because that's just nuts. But I'm saying like that's what works for us, and it's, but we have different. I think we have 5 LLCs, so it's just very different. So yeah.
Thanks so much, Jackie.
Nice to meet you, Kaden. Okay, our online people, do you want to chime in at all? I don't, if you have any questions up to this point. Maybe not. That's okay. Do you have any more questions, Kaden? How long have you been dating your girl? 5 years. That's awesome. And where did you grow up here?
Yeah.
Where?
I was in Pleasantville, so I went to school in Pleasantville. She was out in Long Peak.
Oh yeah, so you guys are right there on the border of each other.
Yeah. Been dating since high school. Crazy.
That's awesome. Good for you. You have any kids? Just curious. I mean,